Welcome back. I hope you're having a fantastic day. There's lots going on in the world. Bitcoin continues to be a little bit stuck, but we're going to take a look at what's going on. And of course, all eyes are still on the Russia-Ukraine situation, and Vladimir Putin wants to threaten the world continuously and threaten people who are sanctioning Russia with war, saying that anybody who sanctions Russia is declaring war. And Putin just doesn't know what he got himself into and is getting more and more desperate by the day. And what's fascinating is people from all over the world are joining the International Legion in Ukraine to fight this situation. There are former Marines in the United States that are going back into combat to go help Ukrainians because they just can't sit by and watch. This one Marine here, I just can't stand by, American veteran, and watch the fight in Ukraine. He's going to help right now because sanctions eventually will work. What they need is they need help right now. And there are tens of thousands of people from all over the world joining the fight. So Putin has a rude awakening coming soon. And so just wanted to throw that out there. Hopefully this conflict will be brought to a resolution quickly, and Putin will be removed from office and Russia can continue to rebuild itself. Ukraine can get back and rebuild itself, and we can move forward in a peaceful world. So thoughts are with everybody in Ukraine, with the Russian people that want no part of this, because I know the majority of the Russian people are not behind this. They're being held back, and they are being threatened, and they are being told lies, but I think they know it. So anyways, we'll get on with what's going on here. A lot of interesting things in the crypto world with this situation in terms of how the crypto exchanges are reacting to economic sanctions. And CZ of Binance is saying that he's following the rules and sanctioning individuals that are on the list. Not everybody, not every Russian at scale, but any of those people that are being sanctioned and targeted by the West, any countries that are targeting oligarchs or anybody else, that they are definitely following those rules. They're not doing business with any companies in Russia, things like that. So Binance says they're following the rules. Coinbase says they're following the rules. And it's getting more and more interesting by the day. And the big thing is, in terms of sanctions, it's one thing to tell a company, hey, you can't do business with another country. That's pretty easy to do. But what about when it comes to freezing the assets? So this is an interesting one here, where the exchanges are obviously not going to do a blanket freeze of assets, but they are agreeing to freeze the assets of people who are targeted for the list and for the sanctions, that are having assets frozen at large around the world. I don't know how they'll find that out. I would assume that these individuals are, getting around the KYC and the identity issues and things like that. But anyways, at least the exchangers are saying that they will seize assets of targeted individuals on the sanction list. So that's good to hear. As far as Bitcoin goes today, Bitcoin continues to range. It's unwinding this little area that it's been in right here, kind of running sideways a little bit up. I have a feeling there's at least another 5 or 10% more downside to go. And I'll show you why I'm saying that. What we've seen, I kind of pointed it out the other day, these last couple of moves that we've had in Bitcoin here all started around a Wednesday, January 19th, 20th, and then broke down through the weekend, pumped back up. And then again on another Wednesday, started this breakdown here. And this last Wednesday started this breakdown. And these have been 22 to 23% moves each time. And I'm not saying it'll definitely go like that this time, but if it goes down 22, 23%, that's back down to 35,000. So kind of what we're expecting to potentially see is another test of these lows, because Bitcoin tested these local highs here at that 45,000 range, could not break through. So I feel like it's going to test that 35,000 range one more time potentially, or it could just range in here for a little while and just kind of create this little channel, sideways channel, especially while there's the uncertainty that's going on out in the world right now. It could be creating a little channel, something like this, and just kind of test sideways just a little bit in this channel here. You can draw it all kinds of ways. You can draw it on the wicks, you can draw it on the close, but either way, it could sit inside this channel for a little while and just kind of test back and forth in here, and then ultimately decide on a direction. And this can come out, a couple of weeks, to potentially a month or so. It could potentially range in this area. And that's kind of what has been happening, right? It's been that 35 to 40, 45, $46,000 range, kind of like it was over here, 30 to $40,000 range back in June, July of last year. So now it's in a $35 to $45,000 range. And then potentially, if this range holds through everything that's going on, and obviously, if a serious global conflict breaks out, if World War III breaks out, obviously you're going to see markets melt down completely, including crypto, and no telling how long that will last. But if we get a serious situation like that, you will definitely see a meltdown in the markets. And, depending on how severe that is and what that outlook looks like, will determine how quickly markets bounce back. Again, we've been tracking these moving averages and kind of looking at the different areas of the moving average. And one of the things that we were tracking recently was this area here, kind of looking a little bit like what's going on over here, and specifically this price action here for continuation. And what happened was price broke above the 50-day moving average, just like it did over here, broke above the 50-day, and then dropped, broke through it, checked it, and then went on to the second all-time high. So what happened here was price broke up above the 50-day, came back, checked it, bounced, and then lost it, and then came back here, broke through, and lost it again. So that's a little bit different. It just hasn't been able to get past that 50-day. It got rejected at the 100-day. And then, of course, there's the 200 right there. So let's get rid of that. And then the other thing that we have been tracking, so price has to get above that 50-day, and it has to stay above it, kind of like it did over here, in order to continue on. And it bounced off the 100 over here, price rejected on the 100 here. So that's your differences in these ranges right now between where we were and where we are now. And of course, when you look at this on the weekly, same thing, price is below the 50-week, rejected, didn't quite touch it, working its way towards, it's above the 100, but next stop is to test that 100. If it breaks the 100, then it's going to go down and touch that 200-week moving average. And then, of course, we have the Gaussian channel that we've been following. Price rejected off the midline of the Gaussian channel. And generally, when price gets in there and stays below the midline, it's going to go potentially break the bottom line. And it generally stays in there for a good bit of time. We've looked at this before, but once it breaks below the halfway mark, it is generally about, that was 329 days, almost a year before it broke back out of that Gaussian channel. And it stayed, generally below the midline. Once it broke down, it stayed below the midline for 273 days. That was the most recent. Let's go back here to, that's 2014. That was 2017 we just looked at right there. This is 2014 here. So we only have a couple examples, but it's still kind of consistent. Again, midline 406 days. That was a little longer below the midline before it broke back out the entire time. Once it broke below the midline, it didn't come above the Gaussian channel again for 441 days. So about the same, a year plus or minus, that when it breaks below the midline of the Gaussian before it breaks back out. And the shortest was obviously the March pandemic, very unique situation there. But still, once it rejected the midline, it stayed down for basically 49 days. And then it came out of the channel after that. I think that was really quick when it broke back above 147 days. So that was still almost 6 months, 4.5 months or so that it stayed down in there. And so far, we are right now, Bitcoin has been below the midline for 42 days. So it's just really getting started in terms of being below the midline. It could potentially stay down there for quite a while, just based on history, and especially given what's going on right now in the economy with the geopolitical climate, things like that. The other thing you can look at is MACD. So this is the weekly MACD. You can see prices diving back below the zero line on the MACD, and definitely hasn't broken below here recently in this whole trend on the weekly. This is the first time price dipped below on the weekly. So we can go back and look at what happened the last time it did that. the March pandemic is when the MACD broke below on the weekly. And then, of course, this is the 2017 price broke below MACD on the weekly. And this is the area it looks like we're in right now with what's going on with more sustained downward pressure. And then, of course, on the monthly, when you look at the MACD on a monthly, MACD has crossed down, and it's only done that a couple of times. At any time we've had this cross down, it goes into a longer term in 2017, longer term, kind of a bear market situation. So that's what we're looking at on the monthly in terms of price action with the MACD. And, what we've really been tracking, and here's the weekly here, where you look at this weekly price action that we're in now and kind of compare it to what happened back here in 2017, 2018, we're kind of tracking a bear market pattern kind of like this, where price can bounce down the scale. If you look at it on a daily and look at this price action in 2017 on a daily, in terms of what bear market looks like, you can get substantial bounces. And we've talked about this before. That was an 80% bounce, and then price dropped. That was a 49% bounce. Price dropped, another 50% bounce. So these bounces can happen all the way down till you get that final capitulation. And that's the thing that's been missing so far in this trend, is that final capitulation. Prices drop, bounce, bounce. This is different here, kind of running sideways on the bounce. The only time we've seen that was in that June, July timeframe. So it could kind of do this for a while. Again, my thoughts are it's going to have a really hard time breaking 30,000 unless things get really serious with what's going on around the world. Then it'll definitely sell off, and people will get out, go to cash, and they'll just wait and buy back later if things settle down. But it's going to take something like that for it to break 30, I think, or serious economic conditions. I don't think the Fed is going to be as bold next week when they meet. I don't think they're going to be very hawkish. In other words, I don't think they're going to raise rates higher than probably 25 basis points. If they do, you can see markets react a little bit and get down and test that 30,000, but that's not enough to break 30,000. And with everything that's going on, I got a feeling that potentially what could happen with the Ukraine situation in Russia is that the United States could decide to go ahead and cut Russia off from oil imports. I think everybody's behind that. I think everybody's willing to pay a little bit more at the gas pump to put more pressure on Russia and just completely cut Putin off. So I think you might see that. And if you see that, then the Fed could possibly respond some way and say, well, we're just going to hold off on things, that things are just too difficult right now, and just run the risk of continued inflationary environment, because like he said last week, he still thinks that it's going to come down by the end of the year, even with everything that's going on. We know it's going to be even worse with temporary issues with this global situation. And, there's a lot of other things behind the scenes with this whole wheat and agricultural environment, fertilizer, things like that. So there's going to be a lot of pressure on the economy and a lot of pressure on the Fed to react to and handle inflation. They could come out and be a little bit more hawkish to kind of attack inflation. And then maybe the government could help subsidize people at the gas pump and things like that with food and things that we're experiencing right now. So those are the things that I'm looking at right now. And I will keep you posted if anything develops. But right now, like I said, I'm expecting Bitcoin to drop down and test that $35,000 level. Could be completely wrong, but it looks like it wants to go down there and check that one more time before it decides to try to make a little bit of a run. But given the geopolitical environment, given the inflationary environment and the Fed meeting next week, I do not expect markets to rebound much, if at all. Any kind of a bounce, I would expect a little bit more downside potentially going into the meeting. If it's good news, markets could bounce, including crypto, Bitcoin. If it's bad news, then you'll see some more downside, but not super significant unless things really escalate geopolitically. And if they do, then you're going to see what we saw in March 2020 or potentially worse. And there's not much the Fed can do about that to backstop the markets at that point. It's going to have to let it run its course. So just be prepared for that. Those are the things I'm looking at. I hope you have a great rest of the weekend.